Well, hi guys, I'm Orlando, and I recorded this video about 20 minutes ago, but I forgot to plug in my microphone. Yeah, ADHD is heavy with me. So I'm doing it again. I'm not gonna be able to remember all the jokes that I made on the first video. Hopefully, it's as funny as the first one. And yeah, a couple of things have changed with me. It's been a while since I've done this, and I don't trade Forex anymore. I just trade futures. I trade futures only, and I trade three markets basically. I trade the Japanese yen at the Asian Open, and the reason that I trade the Japanese yen is because the Asian Open is at 5 p.m. here, so I do have the time, to trade a couple of hours at night when I have an opportunity, right? And I only trade the Asian Open and the U.S. Open, the New York Open. The New York Open, I trade gold, and I trade the Nasdaq. And that's it. That's the only three markets that I trade. I trade the Japanese yen, the Nasdaq, and gold. That's it. That's it. And that's it. I came to the realization that if you focus on one, two, in my case, three markets, and you learn them, you are going to be more profitable than you will ever think. Yeah, because they're going to be part of you. You're going to understand, how they act. So that's me. And yeah, let's go to the video. Now my mic is plugged. 1, 2, 3, 4, 5. I have my coffee in my pirate mug right here, and I'm ready to rock it. So, before I go to the chart, now I don't use any indicators. I only use horizontal lines. I'm going to try to go through, I'm not going to explain to you my entry model, because, that's for another occasion. But it's pretty simple. I use price failures. That's the only thing that I trade, price failures. Now, at the last value retreat, Julian talked about this entry model, and it clicked with me because that's the exact thing that I needed. And I'm gonna explain to you that's the exact thing that I needed on my entry model, and I'm going to explain to you why when we're going through gold. And also, I use real protected highs and lows, and you can ask Jeff about those. He calls them fractals. Now, he taught me about that. Thank you, buddy. Now, let's do this. Now, this is the Japanese yen, ticker 6J. Now, this is quite a big contract. It's $6.50, $6.50 per tick. There's no minis or micros in these contracts. I haven't even found it. There is not, but it's okay. If your average risk is about $250, you can easily trade one contract. Now, so what I'm looking at here now, what I do is pretty simple. I fade the short-term trend, and I trade with the trend. I also counter-trend trade sometimes, and I'm going to explain to you how. So basically what I do here is I found points of liquidity, real highs and lows. Here we have one. Now this is my draw on liquidity to the upside. Yeah, that's right, ICT concepts. Because that's what I used to trade. I still trade ICT concepts, but when I applied price failures to my entry model, it all became very, very, it all changed for the best. My win rate just went through the fucking roof. Now, and here's my draw on liquidity to the downside. Now, what do I see here? A couple of things, mates, a couple of things. Now, this is my 15-minute draw on liquidity. I'm not going to move to the 3-minute chart because on the 3-minute chart is where I found my entries. And we're just looking at price action itself. So what do I look here? I have my highs and my lows here. This is a perfect draw on liquidity to the downside. Perfect fractal, if you ask me. Now, Jeff is a master of puppets. Master of fractals. Ask him about it. Now, I'm trading bodies every day. So, now, what do I see here? Pretty simple. I see, weak players in the market right here. Boom, boom, and boom. Now, what are these? Highs and lows within my range, right? This is my 15-minute range. This is very important for me. This is where I found my price failure levels. Now, what I'm doing here is I'm looking for, and all of these highs and lows are liquidity levels. This means what are liquidity levels? It's pretty simple. It's where stop losses are placed, mates. Not big orders, but a ton of orders in the market. I don't have my depth of market here because it's Saturday. But this time of sales here, right here. You can see the orders, right? Live orders, and on the right side here, you can see the actual depth of the market. The market is does one of two things. It either draws on liquidity, which means that it moves through, liquidating, levels with high orders, or it fills gaps. Now, doesn't matter, so I have my draw liquidity here, and what I'm looking for at the open on the Japanese yen is quite simple. I'm looking for longs. Why? Because I trade with a trend. I try to trade with a trend. Sometimes I will counter trend trade, my friends, but yeah, that's for another day. But here we have the possibility of doing both. We have the possibility of doing both at the open. So I will either counter trend trade with half my size, or I will trade with a trend with my full size. That's it. That's one of my rules. I counter trend trade with half my size, normal size, right? Now, you're going to tell me, but you know what? This market is bearish. If you zoom in, you have to zoom out. You have to look at the big picture. Look at the forward chart. Fuck no. I'm not going to do that. No, hell no. Yes, this market is very bearish, but that doesn't really matter to me. I'm a day trader. Right? So my current trend is bullish. This market is bullish to me. This is my 15-minute trend, right? And if you notice, price making higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. Who knows, right? This is bullish. This is bullish, my friends. And we might be in a bearish market, but the trend right now, the overall trend for me, because I look at the 15-minute fortnight direction, that's it, is bullish. Now, counter trend trading would be bearish, a bearish position, right? So I trade with the trend, and I fade the short-term trend, which would be something like this. Now, this is what I'm going to look for at the open on Monday. I'm going to look for longs here. Now, this is my first level of draw of liquidity here. So, you know what? I told you that I was going to talk about how I changed from trading truly just ICT concepts to applying Julian's price failures on my trading. And here, I'm going to give you a small example, right? Now, ICT concepts, draws on liquidity. You have heard about it, everybody. It's very good, right? It's very real. It happens. People hate on the guy, but, his concepts are something that really, really helped me out in my trading. So, basically, this is an order block, right? It's a big order block. This is an accumulation of buy orders here before the continuation of the trend. It's pretty simple. If you don't know what an order block is, well, now you do. So basically what I used to do, my friends, is I used to go and wait for, this liquidity level to break, and then a continuation higher of the order block. But what really what I really didn't like, oh boy, what I really didn't like about this is that I was trading really, hold on, how do you get rid of this? I don't know. All right. So what I really didn't like about this is this, right? I used to place my buy limits right here at the top of that order block. My stop losses at the bottom of that order block, and then, my targets at the draw on liquidity. So I would have something like a 6 risk-reward ratio of this. But the thing is that, and I was profitable trading this, mildly profitable. I was profitable. I didn't like my win ratio at all. And this is the thing. I don't like to lose. I hate losing trades. I fucking hate it and hate it. I hate it. It fucks with my mindset, with my psychology, right? And the thing about this is that you are going to lose about 40 to 45% of your trades. But because you have such a big high risk to reward ratio, you will end up making money. But I don't like it, right? And the thing is that how am I supposed to know that this order block is going to hold and it's not going to go towards this one, or this breaker block, or this FVG, or whatever? How can I know this? Well, you don't. And that's as simple as that. You don't. So 45% of the time, price is going to go down on you. And then Julian came to my life. I knew I've met him before the last Bali retreat, but on his last ever in his fucking life lecture, he taught me something that was just I get fucking chills in my spine just talking about it. He taught me something that was eye-opening for me: price failures. So now what I do is I draw all my ICT stuff, but I wait for a price failure right here. So I wait for price to mitigate this order block right here, but I wait for my price failure to go higher, right? I'm not going to go into my entry model. I'm just explaining to you how it works. So now what I would, instead of having like a 6 risk to reward ratio, I'm going to have something about I'm going to draw it here. I'm going to have something about about a 3.5, let's call it 3.5 risk to reward ratio, instead of a 6. That's right, 3.5 risk to reward ratio with my entry model. But my win ratio now is above the 70%. That's right, my friends. That's my win ratio now. So I'm loving this. Now, having said that, I'm not going to go through my entry model, but I needed to explain to you what it is that I do for you to be able to understand what I'm looking at when I'm looking at in the market, right? Because I'm not going to draw all of this in every single chart that I go through. Damn it. I don't know how to, just let me delete all of this. All right, so this is what I do. Now, let's go through this chart, right? Let's go through the Japanese yen and what I'm looking at for on Monday. Now, I do have a Telegram group where I send all my trades. You should ask James about that if you're interested. And if you're not, that's fine. It's really okay, right? But now, oh boy. What I was looking at. So the Japanese yen at the open. I said I am looking for buys. So what is this? This highs and lows. This is just liquidity again. Boom, 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 boom. This is again just liquidity, and I'm going to use that liquidity as a magnet to wait for my price failure. Because price is going to take out all of these stop losses and hopefully create a price failure right here. A price failure right here. Now, should we get that price failure, I'm going to go long. And what happens here, you guessed it, my friends, all of these lower highs create also liquidity, which is going to be a magnet for my longs, my drawn liquidity. My target would be these highs on the 50-minute chart. Now, that's my long scenario. That's my preferred scenario. But if you notice, we do have a box within the box. We have a box within the box. And let me just delete all of this, guys. I have to delete it one by one because I don't know how to delete it all at once. So we have a box right here. This is the box. Right here. This is the box. This is the box within the bigger box, right? We have an inside box. Traders will understand that joke. So, maybe, perhaps, because we don't know what's going to happen. No one knows, right? No one knows what's going to happen. So, Perhaps what it is that we are going to get at the open is higher prices on the Japanese yen, which is perfect by me because we have a ton of also liquidity at the highs, right? Big, stop losses. So basically, if we get this kind of movement at the open right here, we get a price failure at the open, what I'm going to do, I'm going to go short on the Japanese yen, and of course, all of this liquidity that we talk about is going to be my magnet, and I'm going to use that to ride the Japanese yen towards the downside. Yes, this would be also one of my preferred. I mean, there's only two possible scenarios, right, for my entries, either short or long, right? But if this happens, I'm going to target these lows right here. And if this happens, my friends, I am most definitely going to trade at the price failure to the upside. Now, so if we get a short setup at the open, I will trade the long setup also if we get a price failure. That's the reason that price failures, right, with these ICT concepts are killer. But if we get the long opportunity, I will scratch the short opportunity because what I do most of the time is I leave a runner when I trade with the trend, right? So that's the Japanese yen for me. There you go. Now, how long have I been talking? I don't know. All right. And this is what I do every day, right? Every day I open my charts. This is what I do. Gold. Now, gold is sketchy. Gold is sketchy. Gold, I don't have a short setup on gold, or I don't wish to have one. I only have a long setup, and it's almost there. Now, real drawn liquidity should be here. Right there. 50-minute chart. There you go. I don't have a short setup, my friends. Right, so here's my 50-minute box. Yeah. What I'm waiting for is quite simple. At the open, I don't know what's going to happen. I don't think I'm going to trade gold at the open. It gets quite volatile. But if I get this, I will trade it. And yeah. We have weak players in the market here and here. Right, what are weak players in the market? After price captured all the, because we have a very nice draw on liquidity here. You can see that price you just killed all those weak longs. I mean, price action is going to give you everything you need to understand to be profitable in market. You don't need fancy indicators. So basically, price killed all the weak longs here. Eager to get long in the market at the previous highs. That doesn't work. And gave us true direction after the break of these highs. Right? It's pretty simple ICT stuff. So. What I'm looking at here is for weak longs in the market after the liquidation of these lows. So again, a price failure here. This is my price failure level, and I will go long. I will go long here. Right. This is not exactly my risk reward ratio that I will get. I don't know how much I will get. I will get what the market is willing to give me, and I'll grab it. So that's my job. My job is to execute my model. That's it. I mean, the math takes care of the rest. So this is my what I'm looking at on gold for the open. No shorts inside, only longs, and of course I will leave a runner here. Because I believe that we are going to, I mean, we have a very big draw on liquidity here at around the 27.55 level. These mildly equal highs. There is a ton of stuff, orders here. So I most definitely will be looking to at the open, because I day trade and I day trade with a prop firms, I cannot hold trades overnight. So that's why I'm always looking at gold on the Asian session, because if I get this price failure on the Asian session, guys, I can leave a runner overnight towards my my highs, my real draw liquidity, which would be here, which you guessed it will be massive winner. So that's gold for me. And lastly but not least, the Nasdaq. Now Nasdaq all-time highs again. Goddamn. Again, no shorts, my friends, no shorts for me. Only longs. And we have a nice box here. Again, if you don't know how to find real highs and lows in a trend, ask Jeff about it. He is possibly the master of these puppets. I'm sorry that I'm looking up, but there's a big wasp, black wasp, inside my house. That's why I'm wearing a hoodie. Go away, bitch. All right, so yeah, so here's my box. Price action on the 15-minute time frame looks choppy. It is choppy. You know, it is sketchy to be trading at all-time highs. It is, because if you look at this massive. I took a longing on Friday. Was a pretty nice long on Friday after this price failure right here. And my targets were at this week. Right here is where I took profits. Pretty nice long. I took half my risk off because this move was super bearish. Again, super bearish. Now, and this is what's why you know, trading at all-time high is so sketchy, you know, and this is why you need to look for confirmation when you go long. And what I'm doing here is I'm just waiting for price to give me a price failure entry below the 21 120 122 or so, whatever, to go long towards all-time highs again. Now, there is not a short setup inside for me on the Nasdaq. I'm probably not going to trade the Nasdaq. I mean, I'm pretty sure I'm not going to trade the Nasdaq at you know, at the open on Sunday for me, Monday for you. But here is where I would look for a price failure to go long and long only. Hola. Yeah, that's it. I mean, I don't know what else to tell you guys. This is the three markets that I trade. Yeah, that's it. That's it for me. Sorry if this wasn't long enough, but I tried to make it as long as I could. But you know what? I mean, it's as simple as that. Let's rewind and let's look at possibilities here. Now, Japanese yen is the market that I'm loving for this week. This is the market that I'm loving for this week. Number one, Japanese yen. If I get a short setup, just a the minutes of my video. See if we get a short setup. Short price failure, I will trade short towards this drawn liquidity at the lows. And then if I get a price, I will close my entire position here. And if I get a price failure here, entry at this drawn liquidity, I will trade the upside and leave a runner. If price, you know, fails to, if price goes down, opens lower, and gives me this price failure entry on a this draw on liquidity, I will go long and leave a runner, and I will not look for shorts. That's the Japanese yen, my preferred market for this week. Second market, gold. Looking for longs only. Looking for longs only at this level. Looking for price failure at this week low after the liquidation of these weak players. And targets at the next draw on liquidity, leaving a runner towards this highs around the 2760 or so. And third, but not least, the Nasdaq. And yeah, I have absolutely nothing drawn here. I don't know why, but you know, again, liquidity. So I am looking for this. Oopsie. I'm looking for this price failure entry towards all-time highs on the Nasdaq. That's my third or my least preferred market to trade for this week, and that's the only three markets that I trade. And that's me. I'm gonna go big on the screen. I don't know what's going on. All right, so that's me, guys. I hope this, the way that I look at the markets helps you, or somewhat. Yeah, helps you somewhat. in your trading. And I wish you all the best, and good trading next week.